Chip ultra clusters, ultra servers, chip development, LLM. Then we've got talk about developer tools. There's a lot to get through. Let's start with the ultra cluster. Can you just talk to us a little bit about this more than 100,000 chips that will be put in one single area for AI hardware? Why do it? What will it offer?
Yeah, this is something that we're building together with our partners in Anthropic, and it's actually going to be several 100,000 chips. And they're focused on, and it's our new Trainium 2 chips. And so we expect that this should deliver them 5 times more compute than they've used in their last model training. And so we're really excited about what they're able to accomplish. And they're expecting to build much bigger and much more capable AI models from that large compute cluster.
Talk to us a little bit, compare and contrast here. This is about less dependency on Nvidia GPUs to many ways, doing an alternative for your clients. What sort of cost saving will clients get? What sort of energy and efficiency will they get?
Yeah, well, first of all, I think we like to think of it as a supplement to NVIDIA GPUs. NVIDIA has a fantastic product. That team has done an outstanding job executing. And we think that the vast majority of workloads are going to continue to run in NVIDIA processors for a long time. But customers want choice, and they want choice that can give them some lower cost options. And we think that for certain workloads, for many workloads, Trainium 2 can give customers 30 to 40% cost performance benefits over today's GPU powered instances. And so we think that that's a huge win for customers, particularly as they're looking to lower the cost of generative AI workloads. But we'll be great partners with NVIDIA and continue to lean in on building great technologies together with them for a long time.
Trainium 2
There is no doubting that for anyone who purchased shares of this chipmaker 10 years ago, Nvidia has proven to be a life-changing investment. This is due to the fact that Nvidia's stock has produced impressive returns of nearly 26,800% over the last 10 years, greatly outpacing the S&P 500 index's 195% gains over that time. Long-term investors in Nvidia stock have benefited from a number of catalysts, including the expansion of the video game industry, the growing use of the company's graphics processing units, GPUs, in data centers, and new growth prospects in industries like digital twins and the automotive sector. With a market valuation of just under $3.4 trillion, Nvidia is now the second largest corporation in the world, thanks to a spectacular increase in its shares over the last 10 years. Given that the size of the global economy is predicted to reach $110 trillion this year, it seems unrealistic to expect Nvidia stock to repeat its astounding success over the next 10 years. A 35-fold increase in Nvidia's shares over the next 5 years would make the company larger than the world GDP, with that figure predicted to rise to about $140 trillion by 2029. Naturally, that is ridiculous. Investors should also be aware that it might not be the greatest idea to place a single bet in the hopes that it would change their life. However, given the enormous untapped revenue opportunity it is sitting on, Nvidia might still have more to offer investors in the long run, which is why it might find a place in a balanced portfolio. Let's examine Nvidia's possible drivers in more detail and see why adding this stock to your portfolio can prove to be a wise long-term investment. Nvidia executives highlighted the company's $1 trillion sales potential in its 2022 Investor Day presentation. $100 billion in gaming, $300 billion in the automotive sector, $150 billion in enterprise artificial intelligence, AI, software, $150 billion in Omniverse enterprise software, $150 billion in enterprise chips and systems, and an additional $150 billion in hyperscale chips and systems comprise the company's breakdown of this opportunity. But in the last few years, that addressable opportunity appears to have expanded significantly. For example, Nvidia management currently believes that data center processors alone represent a $1 trillion revenue opportunity. This is because, in an effort to both boost processing capacity and lower electricity consumption, the chipmaker is now projecting a shift in data centers from general-purpose computing to accelerated computing. Accelerated computing allows you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost and lower energy consumption, CEO Jensen Huang said during Nvidia's August earnings conference call. It won't be uncommon, he continued, for someone to switch from general-purpose computing to accelerated computing and save 90% of their computing expenses. Accelerators like GPUs, a market that Nvidia controls, enable accelerated computation. According to reports, it held 98% of the market for data center GPUs the previous year. Given that competitors like AMD are far behind Nvidia in terms of data center sales, this is not surprising. The company's earnings are anticipated to expand at a pleasant rate in the future, which can be explained by the robust growth in Nvidia's top line. With $1.30 per share at the end of the last fiscal year, Nvidia's earnings are expected to more than double this year. Its earnings could rise by 50% in the upcoming fiscal year and by 26% in fiscal 2027, according to the above graphic. Nvidia's bottom line might reach $11.93 per share if it can capitalize on the attractive addressable market that is available and achieves 15% annual earnings growth over the next 10 years. The stock is currently selling below the company's 5-year average forward earnings multiple of 41 at 32 times projected earnings. Given the anticipated earnings of $11.93 per share, Nvidia's stock price might reach $489 per share if the market chooses to reward it with a larger multiple, and it trades at 41 times earnings after 10 years. It doesn't appear impossible to reach that level, which would represent a 254% rise from current levels. Therefore, since it still has the potential to increase their wealth, investors may want to purchase Nvidia stock to retain for the long term. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Is Nvidia, are you one of the lone people betting against Nvidia? Walk us through this trade.
Yeah, it's time. It's time. So I've actually taken some shots in Nvidia, over the last few months to actually look for the stock, both higher and lower. But right now, for the first time in a very long time, I think we could fade, if you will, in Nvidia, or not necessarily be so bullish. So the first thing I'm going to say is that I'm going to be selling a very slightly out of the money call spread here. Is it an outright, bearish trade? Yeah, as long as the stock does not continue to appreciate to the upside, this trade could be profitable. But I think Nvidia, for the first time in a long time, is going to be facing some competition, specifically from Amazon. Obviously, we've heard about the deal where Amazon has actually been signed on by Anthropic to actually build, again, one of the largest AI clusters out there in a supercomputer. And that's business, again, that Nvidia is not going to have. I think the entire industry is looking that way right now. Although we still see some price appreciation inside of Nvidia, I think it's going to be rather muted. As such, I'm just going out to the Jan 17 expiration. Again, I'm going to be selling a call spread, and that is going to be selling the 145 calls, buying the 150 calls. Again, selling the 145 calls, buying the 150 calls. This one's done for about a $2 credit. So I bring a credit in. Anything below 145, and we're golden in this particular trade, but that's actually the key right now, is to actually slow, if you will, some of the momentum that we've actually seen in Nvidia in the last couple of weeks.
Okay. All right. So, Kevin, you've been very agreeable up to this point. What about when you take a look at technical levels for Nvidia? Do you share the same sentiment? Do you see where Don's coming from?
I see where Don's coming from. It's a very hard stock to fade, though. So let me hedge my bets here when it comes to the technicals, because once again, you do have a lot of this enthusiasm when it comes to artificial intelligence. And Nvidia has been utilized as a flight to safety type of trade here if we do see some volatility in the broader market. But the reason why I will say that he may have a point here is that we actually have some divergences actually taking place for the RSI. We'll start at point A. Point A, we saw this divergence on the RSI where it's making a lower high and making lower lows, but the price for the most part was actually kind of staying stagnant. We usually have a double top pattern, and then we see a pullback. So those purple lines are kind of associating with the RSI divergence, and then when we actually see a flush, we could see that back in February of this year. We had the same type of scenario taking place in late June, and then we started seeing the flush basically in the middle of July. And right now, we actually still have that same type of divergence. If you kind of look at around October 17th, RSI has been actually making lower highs on a relative basis and making lower lows. But if you look at the price action, it's been able to, for the most part, hold up. Now, you can have a consolidation in time, or you can have a consolidation in price. You got to kind of pick your poison there. But if we do see the same type of trend like the previous two over this year, you would expect maybe a pullback in the name. And if we do see a pullback, the first area of support is going to be $130. The next one that you're going to be looking at is around $117. That's fairly aggressive, but once again, the divergences usually resolve themselves one way or another. Now, if you're a bull, you have that MACD actually kind of curving to the upside here, trying to hinge a little bit higher. So that kind of gives you a little bit of conflicting data sets. And you also have that bullish ascending channel that's taking place right now. So respect the channel for now. 150 could be an area of resistance. A lot of options activity sitting there. But I understand the reason and his thought process when it comes to potentially a fade. But if it does happen, Caroline, these fades are generally fairly quick, and you do see some buyers actually stepping in aggressively. So you probably got to be tactical if you are trying to short the name.
Yeah, it seems like anyone says, so many people that we talk to say buy any dips on Nvidia. I was taking a look, 91% of analysts have a buy rating on it still, despite this impressive run higher, and median price target 12 months, but 175. So just throwing.
Even while Nvidia presently controls a large portion of the AI chip market, competitors like Intel and Advanced Micro Devices are becoming more and more formidable. Additionally, Nvidia has faced difficulties in the Chinese market due to export limitations and geopolitical concerns, which may have an effect on sales of some high-performance devices. Despite these challenges, most analysts think that Nvidia will be able to hold on to its market-leading position for the foreseeable future thanks to its technological advantage and robust software and developer tool ecosystem. Analysts generally agree that the ongoing spread of AI applications across a range of industries will continue to boost Nvidia's long-term growth potential. Revenue for fiscal year 2026 is expected to be between $186 billion and $225 billion, with predictions for earnings per share ranging from $4.15 to $5.10. According to these projections, the need for AI processing power is expected to continue growing at an exponential rate. Nvidia is well positioned to benefit from this trend because to its state-of-the-art hardware and software. For Nvidia, the potential magnitude of the AI computing market is a huge opportunity. The need for specialist AI hardware is predicted to increase rapidly as companies in a variety of industries use AI technologies more and more for activities like autonomous systems and natural language processing. Within the next 10 years, the global market for AI chips is expected to grow to hundreds of billions of dollars yearly, according to some estimates. As the industry leader at the moment, Nvidia is in a strong position to benefit greatly from this expansion. The company is a desirable partner for companies wishing to use AI on a large scale because of its end-to-end solutions, which include both software and hardware. Additionally, future applications like AI-powered robotics in warehousing and manufacturing may create completely new markets for Nvidia's technology, opening up even more opportunities for long-term expansion. In order to sustain its dominant position in the AI chip industry, Nvidia has a major edge thanks to its sustained investment in R&D, robust software tool ecosystem, and developer support. Significant performance gains over current generation products are anticipated from the company's future Blackwell architecture, which might cause Nvidia to fall farther behind its rivals. Due to this technological advantage and Nvidia's existing connections with large cloud providers and businesses, clients find switching to be expensive, which makes it challenging for competitors to capture a sizable portion of the market. Furthermore, Nvidia has a strong value proposition that goes beyond just hardware performance thanks to its NVDA software platform and vast library of optimized AI algorithms. Even as competition heats up, Nvidia may be able to maintain its market dominance with its all-encompassing strategy to AI acceleration. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Available, Trainium 3 in the works, and all of this is as Nvidia at the moment, it's estimated, has about 95% market share. Do you agree with that sort of number they have, and what sort of area do you think that that will come down to?
Yeah, I mean, I think it's probably higher than that. I think the vast majority of workloads in generative AI today run on NVIDIA technology, and they've absolutely been the leaders in that space. But we do think we hear from customers that they want choice. And just with our processors, where we're tight partners with Intel and with AMD, but we decided to go build a general purpose processor called Graviton, and it's been hugely successful with our customers. But we also provide lots of Intel and lots of AMD processors in our cloud today, and those businesses continue to grow. So I expect that our usage of NVIDIA will continue to grow from our customers, and that choice is really going to be powerful. And as you see this explosion of generative AI usage, I think there's going to be plenty of business for multiple different people to be successful.
A key partner is Intel. How concerned have you been about the change at the top?
Oh, it's okay. I wish Pat the best. He's I know Pat, and he's been a good partner of ours. But we've been partners with Intel for a long time. It's been 18 years since we launched our first Intel instance when AWS and EC2 first launched, and we'll continue to be great partners with Intel, and they have a great technology team there. And we look forward to continuing to roll out the latest technologies from Intel for our customers to be able to use.
And you've been continuing to roll out, as you say, NVIDIA offerings. Last time you were on, we were talking about Blackwell, of course. Many have been frustrated, perhaps by some slowness to market there. When do you anticipate that Blackwell will be unfolding, and how difficult has it been to ensure the supply side is there?
Well, they've obviously had some manufacturing things that they're going through, but we're very excited about it. I think the early returns and the early looks at Blackwell look fantastic. We expect almost a 2.5 times gain in the compute power that you get from Blackwell that we saw from H100s. And so I think it'll be a really material jump for customers once we get those out. And I think those will be early next year. And we're excited about putting them in customers' hands. And we'll get them out there as soon as they're available.
Investors, though, they find it wild, this whole frenemy existence that's going on. You truly think that investors here think, oh, we want to see NVIDIA dependency as well as AWS having its own offerings? Is that something you think everyone can swallow, or do you think ultimately there will be a broadening out other than just NVIDIA winning all?
Look, I do think it's a partner. Like, if you think about AWS, we started from the very beginning thinking about this partnership mindset. And we built the entire business around AWS, thinking about how AWS would have services and our partners would have services, and that there's plenty of space for all of us to really grow and build our businesses. And that is true for software providers. It's true for service providers, and it's true for technology providers. And so I think that we've proven time and time again over the last 18 years that AWS can have products and our partners can have products. And then as we make them all available, that the whole pie gets bigger. And so I think there's plenty of opportunity for both. And so it really isn't. I think it makes for a fun narrative that it's either or. But we're great partners with NVIDIA. We will continue to be. And this is all about making the pie get bigger.
As it continues to lead the GPU and AI chip sectors and record outstanding financial results, NVIDIA is riding the wave of artificial intelligence. Although NVIDIA faces some short-term challenges, experts and investors are generally optimistic about the company's long-term prospects as it increases production of its next-generation Blackwell architecture. Revenue during the third quarter of fiscal year 2025 increased 94% year-over-year to $35.1 billion, according to NVIDIA's impressive figures. This remarkable expansion was mostly caused by the increasing demand for the company's data center products, especially its Hopper GPU architecture, which is intended for high-performance computing and artificial intelligence applications. NVIDIA has projected $37.5 billion in revenue for the next fourth quarter, which is a 7% sequential rise. Even though this forecast fell just short of some experts' projections, it nevertheless shows that there is still a strong market for the company's goods. With estimates for the first half of fiscal year 2026 in the low 70% range, gross margins are anticipated to experience some pressure in the near future. However, as manufacturing of the new Blackwell architecture ramps up, management expects margins to return to the mid-70s in the second part of the year. The main driver of Nvidia's success remains the rapid expansion of artificial intelligence applications. Demand for Nvidia's high-performance GPUs and specialized AI processors is being driven by the quick expansion of AI infrastructure by cloud service providers, consumer internet firms, enterprises, and even sovereign entities. The best-performing segment has been Nvidia's data center division, which had a 17% quarter-over-quarter increase in sales in Q3. Particularly popular has been the company's Hopper computing platform, solidifying Nvidia's standing as the leading supplier of hardware for AI acceleration. All eyes are on Nvidia's next-generation Blackwell GPU architecture as the company seeks to keep its technological lead. It is anticipated that Blackwell, which is scheduled to start volume production in the fourth quarter of fiscal year 2025, will provide notable performance enhancements for workloads involving AI and high-performance computing. According to some analysts, Blackwell's initial ramp-up phase might provide several $billion in revenue. However, because users might postpone purchasing of current generation items in anticipation of Blackwell's introduction, the switch to this new architecture might cause some short-term difficulties. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.